They ridiculed the idea. They denied it. But in March, President Trump signed an executive order creating a strategic Bitcoin reserve funded with approximately 200,000 BTCs from criminals. No rumors, no leaks, no speculation. It's official U.S. policy, and it's changing everything. For the first time in American history, Bitcoin is being treated not as a threat, but as a national asset, a financial weapon of last resort. And the implications are massive. Because when the United States, the issuer of the global reserve currency, begins quietly locking away the world's most scarce digital asset, you better believe something big is coming. Let's unpack exactly what this means and why the strategic Bitcoin reserve might be the single most important monetary shift of the decade. First, the basics. In March 2025, President Trump signed an executive order authorizing the creation of a sovereign digital reserve with Bitcoin as its foundation. The directive reroutes all existing and future, sees BTC under federal control away from public auctions and into long-term custody under the Department of the Treasury. That includes more than 200,000 BTC already in DOJ-managed wallets, representing over $21 billion in digital reserves at today's price of $105,936 per coin. And the order includes one crucial clause: these coins cannot be sold. Not in a downturn, not in a budget crisis, not ever. This reserve is locked permanently, and that changes everything. Because for over a decade, the government treated seized Bitcoin like dead weight. They auctioned it off. They dumped it for fiat. They handed future trillions to private buyers for pennies on the dollar. But those days are over. Now, Bitcoin is no longer being treated like criminal evidence. It's being treated like gold, or more accurately, like digital gold, with better math, better mobility, and no need for vaults or trucks. And this pivot wasn't arbitrary. It came in response to growing pressure beneath the surface. The U.S. is staring down record debt, rising de-dollarization threats, and a growing chorus of nations, from BRICS to the Gulf states, exploring alternative settlement systems. Central banks around the world have been buying gold at the fastest pace since the 1960s. China and Russia have expanded bilateral trade outside the dollar, and Saudi Arabia is now open to oil sales in other currencies. In that environment, the U.S. needs a monetary edge, a strategic asset that isn't pegged to another nation's credit or controlled by any adversary. Enter Bitcoin, a globally recognized, borderless, programmable monetary network with no central issuer, no dilution, and no allegiance. And now the U.S. owns more of it than any nation on Earth. Let's talk structure. The strategic Bitcoin reserve is managed by the Treasury, not the Federal Reserve. That's not just a technical detail. It's a constitutional workaround. The Fed, by law, cannot hold Bitcoin. Doing so would require an act of Congress. But the Treasury, it already manages a U.S. gold stockpile and can hold digital assets obtained via legal means. By placing Bitcoin under Treasury control, the executive order bypassed political gridlock and gave the U.S. a sovereign claim over decentralized money. And here's what that means strategically. It means the U.S. has a hard reserve that can't be debased. It means the U.S. has optionality in the next currency reset. And it means the U.S. just put every other nation on notice. Because when a superpower stops selling and starts holding, the smart money starts moving. Already, early signals suggest that other nations are watching closely. Germany recently passed a law easing crypto custody for state-approved banks. Singapore and the UAE are running pilot programs for tokenized treasury markets. And even Japan's central bank is openly studying Bitcoin's role in cross-border trade settlement. But so far, only one nation has built a cold storage vault and filled it with real BTC. That's not an experiment, that's leadership. And it has ripple effects. Because Bitcoin's supply is finite. Only 21 million coins will ever exist. Nearly 19.7 million have already been mined. Millions are lost. And now over 200,000 are locked away forever. That means nearly 1% of all Bitcoin that will ever exist is now held by a single government, and it's not for sale. Let that sink in. This isn't just about ownership, it's about access. Because when the next sovereign state tries to build a reserve, the supply they need may not be there. Not at this price, not in this window, not in this cycle. And the consequences go deeper than price. Because a sovereign reserve isn't just about protecting wealth, it's about projecting power. if dollar dominance starts to erode. If nations begin fleeing fiat exposure in favor of provable assets, Bitcoin becomes the new benchmark. A neutral reserve that doesn't care who wins the next election, who controls a central bank, or who defaults on sovereign debt. And the U.S. has now planted its flag. This changes the global game in three key ways. First, it signals to markets that Bitcoin is no longer a risk asset. It's a strategic asset with government-level recognition. Second, it accelerates institutional adoption, because if the U.S. can hold Bitcoin with no liquidation, so can BlackRock, Fidelity, and every pension fund on the planet. Third, it forces other governments to make a choice: accumulate now, or risk watching from the outside as the next monetary layer is formed without them. And here's where this gets personal. Because while governments move slow, markets move fast, and the moment the next sovereign state announces a similar reserve, whether it's Japan, Germany, or even a BRICS member, the supply shock will hit hard. If you think Bitcoin's rise to $105,936 was fast, wait until a second or third nation begins accumulating publicly. Because by then, retail will be priced out, funds will be locked in, and exchanges may implement controls we haven't seen before. When that happens, you won't be early, you'll be late. The window is open now, but not for long. So what can you take from this? Bitcoin has crossed the line. From speculation to strategy. From outlaw asset to sovereign defense layer. It's no longer about price. It's about possession. And if the most powerful government in the world is locking it away, you might want to think about why, and whether you want to be on the inside of that vault or locked outside of it. We track the monetary resets before they become headlines, because by the time the world figures out what just happened, it will already be too late. And here's what most people still don't understand. This isn't just a signal of adoption. It's a signal of escalation. Once a nation builds a reserve, it doesn't just sit on it. It builds policy around it. It builds infrastructure to protect it. And it starts using it as leverage, politically, economically, diplomatically. This reserve will not remain passive. It's the beginning of a digital arms race measured in nodes, hash rate, and custody rails. And unlike trade sanctions or fiat controls, Bitcoin doesn't require permission. It's accessible, it's transferable, and it's finite. That makes it dangerous and powerful all at once. As currency systems fracture, new alliances will form around digital asset custody. Nations that move first will lead. Those that hesitate may never catch up. And individuals who wait for permission will be locked out entirely. It won't be a warning when the rails are locked. Just a new reality where Bitcoin is no longer available, only allocated. If you want to stay ahead of that decision, not chase it after the gates close, subscribe to Wealth Signal. We track the monetary resets before they become headlines, because by the time the world figures out what just happened, it will already be too late.